Hello, everybody. Welcome to Thursday. The S&P 500 was up 1.75% today. Really good day. Lots of green all over the charts. Hard to find some holdings that actually didn't do well today. And one of the main catalysts just seems to be kind of the dip buying that happens. The market comes down so much, especially some of these stocks. Tesla, for example, was up 8% today. And what happens? They get so low that people come in to buy that dip, and then you have this short interest sitting on top of those stocks with a bunch of different people hoping the stock continues to go down. And when it starts back up, they often have to cover that short by buying the stock back, which of course makes the stock go up even further. So definitely a lot of those types of stocks, it seemed today, were doing quite well. If you look at the NASDAQ, it did a lot better than the S&P 500, and that hasn't been the case here recently. Volume is still kind of low as far as that goes. One thing we are seeing is that when we get these movements upward, sometimes they're short, sometimes they last a little bit longer, but we get a kind of a recharacterization of the market as to what's going to lead. So on the way down all year here, we've kind of seen, the value type stocks do well. These are stocks that are considered value compared to their earnings, for example. And growth stocks have really only done well in the run-ups. And that's where you kind of see a totally different motion. It is something I think we have to watch for real closely, is that you kind of invest in those things that are doing really well throughout the year over the last 3 months or 6 months. A lot of them are things that didn't move that well today. And so all of a sudden, when we do finally get that upward motion that gets us out of this and turns into the next, up trend, if you're loaded up with a bunch of the things that we're doing well, they'll fall behind because it rotates to those things that we're actually doing, not so well, like the growth stocks and the tech stocks and those types of things. So that was true today. It's been true on most of these run-ups, and it's one of the things we do is we analyze, the run-ups and what happened, throughout this year, and what happened during the downturns in those little sections, and try to see, what was powerful in each section, and then try to identify where we're at as far as that goes, and then be in those holdings that are doing better, depending on whether we're in the kind of the down or the up. We've had a lot more down here, obviously, this year than up. So you definitely want to go with that trend for the most part. But that's something interesting that we've seen this year. So one more day left in the stock market for this year. Tomorrow, we'll see what happens. The Santa Claus Rally is a real thing. Goes from the Friday, this last Friday, to next Wednesday. The rate of return has been positive in that time frame over the last 94 years, every single time except for 15 times. So pretty good track record. We've got a few days left here. Hopefully we can pull out a positive rate of return this year also. So look forward to talking to you tomorrow. Thank you very much.